Hello folks, this is Andrew Nadeau from Stonehearth Capital Management here with an educational economic update for February 2022. In this month's video, we'll discuss some recent headlines influence the financial markets in January. I will also provide some perspective on what these developments may mean in the months ahead. Please stay tuned at the end of this video for a required disclosure statement. Stocks ended January lower as investors dealt with concerns over inflation, the likelihood of rising rates, and increasing geopolitical risks on the border between Russia and Ukraine. Despite a negative start to the year, markets did receive positive news on the economic front. That started with the monthly jobs report released in the first week of January. The latest reading on unemployment showed that 199,000 new jobs were added in the month. The unemployment rate also continued to tick down and now stands at 3.9%, just 0.4% above the pre-pandemic high. In addition to this positive reading from the jobs market, fourth quarter GDP data was also released in January. This report showed that U.S. GDP accelerated 6.9% in the fourth quarter, after a 2.3% advance in the third quarter. Consumer spending, which makes up roughly 2/3 of our economy, continued to accelerate in the fourth quarter, climbing 3.3% compared to 2% in the third quarter. While jobs and GDP growth presented a bright spot during the month, inflation continued to present strong headwinds to investors. The latest reading on the Consumer Price Index showed that prices advanced 0.5% in December after climbing 0.8% in November. In 2021, the CPI rose 7% overall, which is the largest 12-month increase since 1982. Keeping a close eye on this continued increase in prices is the Federal Reserve Board, who also met during January. And while the committee decided to leave the current federal funds rate unchanged, they did comment that with inflation well above 2% and the labor market being very strong, it will soon be appropriate for them to start raising rates. And despite a late rally in the month, the major benchmarks finished January with the worst month of market performance since March 2020. The Nasdaq dropped 8.98%, while the S&P 500 lost 5.26%, and the Dow declined 3.32%. A common adage for the stock market says that as January goes, so goes the year. Hopefully such is not the case for 2022. As we move ahead, special attention should be paid to the Federal Reserve and their course of action for interest rates, and how any increase of rates impacts the persistent increase in inflation we have seen over the past year. That's it for this month's Educational Economic Update. Once again, this is Andrew Nadeau with Stonehearth Capital Management signing off for the month of February 2022. Please remember that nothing we talk about here is a recommendation. If you would like to discuss your personal, financial situation, please give us a call at 978-624-3000. We'd be happy to talk to you. Thank you.